चलो नाइस। यार ये इतनी कम सैलरी क्यों आई है? व्हाट्स अप भाई, क्या हुआ? टैक्स भाई, टैक्स। Hello people, majority of us invest in various options to either grow our money, diversify our portfolio and save tax. All of us know there are a lot of tax saving options out there, and today I'm going to talk about one such tax saving investment option, fixed deposits. Hi everyone, I'm Ali, and in this video I'll be talking about tax saving fixed deposits, how they work, their key features, as well as some other tax saving investments so that you can choose whichever you like best based on your goals. Without any further ado, let's dive straight in. But before that, don't forget to subscribe to our channel for some really interesting financial content. Now let's get started. So you might be wondering, what's the big deal about tax saving fixed deposits? Well, they're actually like regular fixed deposits, but with a cherry on top. They save your money on taxes. So this is one such financial product that not only helps you grow your wealth with guaranteed returns, but also allows you to save on taxes. Stick around as we dive deep into the world of tax saving fixed deposits and discover how they can help you save money like a boss. Tax Saving FD is a type of deposit scheme in which you can get tax deduction of up to 1,50,000 rupees every year on your investment under Section 80C of the Income Tax Act. To begin on this tax saving journey, remember to inform your bank or financial services company that you're specifically interested in tax saving fixed deposit. Before we dive into the nitty-gritty of tax saving fixed deposits, let's also understand Section 80C of the Income Tax Act and how you can maximize its potential. Here basically we'll be talking about how Section 80C allows certain investments and expenditures to be made tax exempt up to a limit of 1,50,000 every year. So guys, your tax exemption limit of 1.5 lakhs can be used by any one or a combination of these tax saving investments and expenditures displayed on the screen. Chalo, let's briefly understand what these are. The most common 80C investment option is term insurance premium. Term insurance not only helps in tax saving but also protects your family's financial future in case of unforeseen events like death, critical illness, disability, etc. If you purchase a life insurance policy for yourself, your partner and your children, you can claim tax deduction under Section 80C on the premium paid for the policy every year. However, you're not eligible for this benefit if you buy the policy for your parents or parents-in-law. In case you hold more than a single policy, you can claim tax benefits on this 80C investment only up to a limit of 1,50,000. Another popular investment option under Section 80C is Public Provident Fund. This allows you to invest anywhere between 500 rupees to 1,50,000 in a financial year. Under Section 80C, your taxable income will decrease by the amount invested in this fund. Moreover, the interest you receive is tax-free, which implies an all-round financial advantage. The next 80C investment option is Employee Provident Fund, which is a benefit scheme only available to salaried employees. Here, both the employee and the employer invest a certain amount of money every month. Interest is paid regularly on the amount available in the EPF account. Another 80C investment option is the Equity Linked Savings Scheme. It allows you to enjoy tax saving benefits on the amount paid towards the fund. This scheme offers higher returns as the money gets invested in equity funds. However, it's to be noted that equity investment is prone to market risks. So make decisions only based on your risk appetite so you avoid unaffordable losses. While there's no upper limit on the amount invested in equity linked savings schemes, you can avail of income tax benefits only up to 1,50,000. Unit linked insurance plan is another excellent option as it offers the dual advantage of life cover and investment benefit. Under Section 80C again, you can save up to 1.5 lakhs. Investing in ULIPs allows you to maximize your savings through various market-linked investment options. If you wish to get an estimate of how much insurance coverage will be enough for your family and how much you need to pay for the same, you can use the ULIP calculator. In case you've taken a home loan from any bank or financial institution, you can avail a deduction of 1,50,000 under Section 80C on the repayment of the principal amount of that home loan. Sukanya Samriddhi Yojana is a scheme devised for the welfare of a girl child at the time of significant events of her life, such as education and marriage. The scheme too is eligible for tax saving under Section 80C. You can open an account for 2 girl children under the age of 10. It's an excellent investment option under Section 80C. The last 80C investment option is a National Savings Certificate or NSC. The investment made under this scheme is eligible for a tax deduction like all others. Besides, even the interest accrued for the initial 4 years is eligible for a deduction. Now finally, अब बात करते हैं tax saving fixed deposits के बारे में. This obviously is another 80C investment option. Any deposit you make with a bank for a minimum of 5 years is eligible for tax deduction under Section 80C. A tax saver fixed deposit allows you to choose a nominee who can withdraw the deposit pre or post maturity in case of your death. However, you must know you can't make a premature withdrawal from a tax saver fixed deposit, which, as I mentioned, is less than 5 years. Also, if you contribute an additional sum of 50,000 rupees under the National Pension Scheme over and above the limit of 1,50,000 under 80C, the total sum can be claimed as a deduction under Section 80CCD. Remember that the additional deduction can only be claimed if you have a Tier 1 NPS account. Okay, now let's understand a few features about such tax saving fixed deposits. First thing, as I just mentioned, there's a minimum lock-in period of 5 years. So you can't break your FDs before that prematurely. This is good in the way that it instills financial discipline and ensures your savings remain saved for at least 5 years. Another thing to remember is the interest you receive, either monthly, quarterly or yearly, is indeed taxable. Only the initial amount you invest, which is a maximum of 1.5 lakhs, can be claimed as a deduction from your income. TDS will be deducted on this interest amount and the balance will be credited to your account. Later I'll explain how to avoid getting this TDS cut as well. Moving on. Individuals and HUFs can avail of these deposits. You have to link your savings account with the FD and transfer money from there. Finally, at the time of maturity, the amount will be credited back to your savings account. You can start an FD from your own account individually or hold it jointly with another person as well. But tax benefit will only be available to the first account holder in case of joint accounts. Another thing to remember is that the interest rates on these FDs differ from bank to bank, and usually smaller banks offer more interest. But then again, your money is much safer with a big bank or a reputable financial institution. You also can't take out a loan by offering your tax saving FD as a collateral, but that facility is available for regular FDs. Okay, now let's understand some benefits. First off, there's high returns. A tax saving fixed deposit has higher interest earning potential than savings accounts. With a tax saving FD, you can make a one-time lump sum deposit. It's a convenient feature if you have a sizable surplus savings. Third is the minimum lock-in period. The minimum tenure for receiving tax benefits is 5 years. However, it can be extended for a longer tenure. Fourth is it's secure. A tax saving FD is totally secure. There are no market fluctuations that affect interest rates, as is the case with mutual funds and other market-related investment options like ULIPs, which we spoke about earlier. These FD interest rates also remain fixed until it reaches maturity. Fifth is the flexible deposit amount. FDs offer flexibility in the deposit amount based on the investor's convenience. And sixth are the tax benefits. You can get income tax deductions up to 1.5 lakhs per year under Section 80C of the Income Tax Act, which we've already discussed. But do you know the biggest advantage of investing in tax saving FDs now? We're very close to the top of the interest rate cycle. RBI is not expected to hike interest rates much more. So why not lock your FDs in at the highest possible interest rate right now? Another important thing to remember here is that India is rapidly moving towards becoming a developed economy. And in developed economies, interest rates always remain low. Even if you compare the average interest rates in India, it's much lower now than what it was a few decades ago. And in the coming years, it's only going to be lower. So this is a good time to make hay while the sun shines, because you're not going to get these same rates of interest in the future. There's one more thing I'd like you to be made aware of, and that's the TDS provisions related to the interest you receive on your fixed deposits. See, the thing is, the interest you receive on your FDs is an income on which you're supposed to pay tax. So the government says that your bank or financial services company should deduct TDS at 10% at the source of this income itself, which is when they are paying it to you. and remit the balance interest to your savings account. Now, there are two situations under which you can avoid this TDS being cut. The first one is if your interest income is below 40,000 rupees per year, and this same limit is 50,000 per year in case of senior citizens. Then no TDS is required to be cut. Similarly, if your total income, which is your salary, capital gains tax or income from profession, etc., is below the 2,50,000 threshold a year, and even if your interest income from FDs exceeds 40,000 a year, then also TDS is not required to be cut. But how should our bank or financial services know when they're required to cut TDS or no? Simple. You have to inform them by filling out a form known as Form 15G, which is basically a declaration that an individual has earned below 2.5 lakhs a year and has been exempt from paying tax. Senior citizens have to fill out Form 15H instead, and they have a slightly higher threshold limit of 3 lakhs for the same. So there it is. Congratulations! You're now a tax-saving fixed deposit expert. Share this video with your friends and family to help them unlock their potential as well, so they can grow their wealth with guaranteed returns while simultaneously enjoying a tax-saving benefit too. In the comment section below, do let us know which topic you want us to pick next. Also, please don't forget to subscribe to our channel. Till then, stay safe and invest smartly.